Transurban is one of the largest toll road companies in the world, and we started here very proudly in Melbourne back in 1995 with CityLink, which again was one of the world's first multi-flow toll roads in the world. And since then we've expanded into Sydney, into Brisbane, and into Northern Virginia, which is around Washington, DC. And we have networks in all these cities. And yeah, we're expanding quite heavily and investing in those networks to provide better outcomes for our customers. And another very strong result. I mean, we look to continue to grow our distributions, but at the same time investing long term. And you see that come through our results. We've had almost a 20% uplift in revenue. That's translated into almost a 15% uplift in our EBITDA performance. And more pleasingly for a lot of our security holders, an upgrade in our distribution guidance of 1 cent. So again, we have 4 very strong markets, and we're very lucky that our markets are growing quite quickly from population and economic activity. So if I go around the ground, starting again in Melbourne, so we had growth over 2%, around 2% in traffic, and very strong EBITDA growth. And again, 2% growth on a very large number is over approximately 3 million transactions done on growth year on year for the half year. We go to Sydney, we've had big expansions in there with the M2 and the M5. That's led to very strong high single-digit growth across the whole of the Sydney network, translating again to very large EBITDA growth. We also have the truck toll multipliers going up, which is contributing to revenue. And in Brisbane, which is one of our newer assets in ramp up, we've still seen good growth, although the Brisbane economy is a bit softer than Sydney and Melbourne. And in Northern Virginia, where we run what's called dynamic pricing, which we price the capacity, we've seen strong growth. It's actually 200%, but that's starting obviously from a very low base. But now that market's contributing close to 9% of our total revenue, which is pleasing. So we did an equity raising back in November for our acquisition of Airport Link M7 in Brisbane, which is very complementary to our existing network. We have the Queensland Motorway Network, which now means we completely own that network, so we can provide substantial efficiencies to our customers, but obviously benefits to our security holders as well. We were well supported by our shareholders, and that money now will be put to that use. Well, we have a fantastic project pipeline, not only for our security holders, but also for our customers. So we're looking at about $11 billion worth of committed and planned projects to enhance the networks where we operate, to cope with the growth and congestion that's occurring, but also to create long-term value for our security holders. And we've been able to develop the pipeline in a way that still allows us, though, to grow our distributions in the short term. Looking at technology going forward, fascinating to see all the developments coming through and such a focus of the car manufacturers and other players in this space around the mobility going forward. What we see, though, from a Transurban perspective, and we're looking to how we partner with these technology companies, is most of this leads to increased trips, increased capacity on our road, and we think a really interesting and a much safer future as well for our commuters, which is great. Our focus over the next sort of 12 months is execution. Obviously, we have that big pipeline that I talked about earlier, so we need to execute. And as well as we look at what's happening in these major cities, particularly Melbourne and Sydney, and the economic activity, we actually see it in the major cities pretty bullish on the outlook.